We're talking about one of the biggest investment companies in the world, putting a massive amount of money into blockchain technology. So what does that mean for you, for me, and for the future of investing? Let's break it down in a way that makes sense. First, who exactly is BlackRock? If you've never heard of them before, think of them like the financial world's heavyweight champion. BlackRock is the largest asset management firm on the planet. They control over $10 trillion in assets. Yes, trillion with a T. That means when BlackRock moves, the entire financial world pays attention. So when they announced a $150 billion investment into blockchain, everyone sat up a little straighter. Because this isn't a crypto startup hoping to get lucky. This is the top of Wall Street taking a very serious step into blockchain. Now, let's take a step back. What exactly is blockchain and why does it matter? In the simplest terms, blockchain is a digital ledger. It's a system that records transactions in a way that's secure, public, and can't be tampered with. Unlike a bank, which keeps your records private and in one place, blockchain spreads that data across thousands of computers. This makes it decentralized, transparent, and incredibly hard to hack. Originally, blockchain was built to power Bitcoin. But over time, people realized it could be used for much more than just cryptocurrency. Think healthcare records, voting systems, international payments, identity verification, and, yes, investments. So, why is BlackRock getting involved now? Historically, most big financial companies have been hesitant to jump into blockchain. And for good reason. There have been some real challenges. No one's been totally sure what governments are going to do. Some countries have embraced blockchain. Others have cracked down hard. Especially when it comes to crypto. If you're running a giant investment firm, you can't afford to get caught in legal chaos. Blockchain is powerful, but slow. Bitcoin, for example, can only process a handful of transactions per second. Visa does thousands per second. That's a problem if you're trying to run high-speed financial markets. Even though the blockchain itself is secure, people have found ways to exploit weaknesses, especially in crypto exchanges and smart contracts. We've all seen the headlines. Millions stolen in hacks. Entire platforms disappearing overnight. That's enough to scare any traditional investor. But something has changed. BlackRock's $150 billion move shows they believe those problems can be solved, or at least managed well enough to move forward. They're not just taking a risk, they're making a calculated decision that blockchain is here to stay, and they don't want to be left behind. Now, here's the part that should really get your attention. BlackRock's investment could do more than just make them money. It could change the way the entire world sees blockchain. When someone with that much power validates a technology, it sends a signal. This isn't a trend. This is the future. That kind of endorsement makes it easier for banks, pension funds, and insurance companies to follow. They'll feel more confident exploring blockchain-based assets and tools, which means Massive growth in the space could be coming fast. So, what will BlackRock actually do with $150 billion in blockchain? It's not just about buying Bitcoin. In fact, it's likely much bigger than that. They'll probably invest in things like tokenized assets, turning real-world things like real estate or stocks into blockchain tokens, smart contracts, digital agreements that execute automatically, blockchain infrastructure, investing in the tools and companies that build the technology, and decentralized finance, or DeFi, platforms that offer financial services without traditional banks. All of this could transform investing as we know it. Imagine being able to buy a fraction of a building, trade stocks instantly across borders, or earn interest without needing a bank. That's what blockchain makes possible. And that's what BlackRock sees on the horizon. Now, let's be real. This isn't all good news. There are still real risks here. Blockchain technology is still new. Mistakes will be made. Some platforms will fail. And governments may still decide to crack down, especially if they feel like they're losing control. Plus, if too much of the financial system becomes dependent on blockchain, that could create new risks we haven't seen before. We're talking about a tech-driven system that doesn't have decades of safety nets or regulations built in. So, yes, it's exciting, but it also requires caution. Still, what BlackRock is doing is historic. It's one of the biggest signs yet that blockchain is crossing the bridge from experimental tech to full-scale financial infrastructure. And that means you need to be paying attention because, like it or not, blockchain could shape your future, the way you invest, the way you borrow, even the way you prove ownership. Let's talk about asset tokenization for a second. That's a big word, but it's simple. It means turning something physical, like a house or a painting, into a digital token on the blockchain. Why is that useful? Because it makes owning and trading things faster, cheaper, and more accessible. Instead of needing $500,000 to buy an investment property, you could own a piece of it for $100. You could buy or sell your portion at any time, just like stocks. That's the kind of innovation BlackRock is aiming for. And if it works, it could open the door to a whole new generation of investors. Now, here's the final piece of the puzzle. Legitimacy. When people see BlackRock getting into blockchain, it builds trust. It makes everyday investors more comfortable with the idea. It gives governments a reason to take blockchain seriously and create smarter rules. In short, this isn't just about technology. It's about changing the conversation. So, let's recap. BlackRock just invested $150 billion into blockchain. They believe the technology is finally mature enough to transform traditional finance. Their move could spark global adoption, legitimize blockchain, and reshape investing. But there are still risks: regulation, security, and the unknowns of new tech. Whether you're excited or skeptical, this is something you can't ignore. Because if BlackRock's bet pays off, the way we use money might never be the same again. If you've got thoughts on this, drop them in the comments. Do you think blockchain is the future of finance? Or is this just a risky gamble? Don't forget to like, subscribe, and check out my other videos for more insights on investing, crypto, and the future of money. Leave a comment so we can keep the conversation going. Thanks for watching. Money matters.